What's up, my good people? Doing a trade recap video. We're going to look at gold. So I called out a bear flag last night to give you some of the rationale behind it. I see that this is high, this is low for me as far as the curve goes. The overall sentiment I think was beginning to be bearish since the 16th. Also, I noticed in indices we had a spike up, so that means for me we're more risk on as opposed to risk off. And since gold is a risk off, in my opinion, instrument that people put funds in when the market is going crazy, since the market is looking better because of the short-term tariff deals with U.S. and China. Maybe people are pulling out of gold, shifting back into indices and things like Nvidia, which made all-time highs and it's going even higher. So no need to necessarily play gold like that as a hedge against the down market. So I see people maybe closing out of that and going long. That's the fundamental analysis. Here's the big picture daily analysis. It looked like we got a big drop. I saw a couple candles pull back. Then I drilled down lower to a 4-hour chart, knowing where we were from a big picture standpoint, from a daily and 4-hour standpoint. Well, I'm sorry, daily chart perspective. Found a nice little demand zone here that has some nice volume. It was made in the African German pre-London session. Took off from there back to the old supply zone. Looked like a good area to mark off for future reference. Later, saw a nice big drop down that retested this level of interest. That's been a level of interest for quite some time, since April of this year. So we tapped that. I figured since we didn't go higher with that, if we break that, we have potential to go lower all the way down to this demand zone. Marked off here. Drilled down a little lower. Went to a 30-minute time frame. On that 30-minute, I went back and explored this same region right before the demand zone. Looks like we had a zone here that got retested already, so I didn't think there was much left in that. But to validate that, I went and put on a volume profile, one of my favorite tools. I do the fixed one. We'll go from this point. I'll take it all the way up to the top, but I'm only really looking for this leg. Nice concave area. That's the gap. The gap got filled. We tapped it right at this volume shelf. Textbook perfect. That's the only area that may give us a little resistance, but we did have some nice movement from there before, so we'll see how much is left in the tank. We're testing that area now, as you can see. So once I found that was concave, let's fast forward to present day. If you look right now, we're bouncing off of that area. So I called out in the Thinkific course that I'd be looking to get out around maybe the 3260s area. Yesterday, this was the idea. We called it out January 26, 1952. That's 7:52 Central Standard Time. This was the flag idea. It's playing out today. Textbook perfect. It's about 8:30 now. This was 8:24 when this was published. Kobe, 08:24, Mamba Day. And we are tapping those 60s. So this may be a good time to wave the white flag of victory on the bear flag, because the New York session could push it lower. We may turn around before that demand zone, and be setting ourselves up for Sunday for either some short-term long positions for retracement back up, or we may break that demand zone on Sunday and continue lower. Only time will tell. If we do continue lower, I'm looking to go to this 3250s area, and beyond that, going back up to a higher time frame, 4 hour. We may get all the way back down to this 3175. We'll call it 3170s, 3175 area. We could get back as low as that if we break this demand zone. This zone has already been tapped there, I think. So, I think we could go lower and retap this one. And if we break through that, we'll just see what happens. How did we enter on this last night? So I look at the 5-minute opening range and 1 minute opening range for the metals market. So on the 5 minute range, I saw okay, Tokyo made a nice opening range. I was waiting for the break to go short on that one, and we could have entered from there and still be in. I also noticed that Australia opened here. We had a couple fair value gaps in there. This Australian Open ran into the New York Open. This is the New York, not the gold pit. So the 8:30 New York Open, which had a nice amount of volume, more volume than everyone else. Couldn't break through it. Came back. It didn't quite get to the Asian session range again, or Tokyo session range. I'm sorry, Australian session range again. Tokyo couldn't get there, and Tokyo finally took out New York. When they took out New York, you could have taken it there and ran all the way down from that. What I did, I called out this demand zone, which encompassed the Australian Open. It also encompassed the fair value gap right above that. And this was the supply zone I called last night, right before Tokyo session. So if you were in the session with me, I think the old screenshot on this chart was 1952. Yeah, so in 1950-ish, when I published the idea, you could have waited on the demand zone. At 8:30, it came back and tapped it, and it ran down ever since. And the risk to reward on that trade idea from last night, if you just waited on the supply zone retest and not even did the opening range, was pretty nice. Let's mark that off. Supply zone. If you took that entry and we're running all the way down, let's go to 1970 just to be cautious. That's 8.38 to 1 with the potential to be a 10 to 1 if you run it all the way down to the low. Right now, it looks like it made it to 8.55-ish to 1, a little over 8 to 1. So that was the trade idea from last night. So you could have taken it from there, or you could have taken the opening range confirmation entry after the candle broke here last night around that candle. That's still 8.5-ish to 1. That's taking the candle close here on the 5 minute. Again, that's the 5. If you wanted to be aggressive, this was the candle close. You probably could have waited for a 1 minute. It just depends on you and how you like to trade. So that is the recap. The bear flag is playing out to perfection, textbook style. So more ideas to come. Happy trading. Happy Friday.